The World Cup may be over, but there's a bigger battle unfolding in global markets. The conflict between the US and Iran continues to escalate, and the attacks across the Gulf and in the Strait of Hormuz, as well as the death of US military servants, are raising the stakes of a bigger and perhaps a more serious conflict in the Middle East. But despite the increase in oil prices, markets such as gold and euro-dollar remained relatively calm earlier today, increasing questions about whether this resilience could crack later this week and whether the 5% decline in the US100 index could continue later on. But let's have a look at the charts and see what the technical signals suggest about the week ahead and what could be the key drivers for those markets. And starting first with the precious metal, well, we can see that the price has been quite stable lately. It's still trading around the 3,950 support region, which coincides with this support trend line drawn from May 2025. So this is a one-year-old trend line supporting the market. And the key question now is whether this stability could develop to the downside or whether the price is preparing for a bullish breakout above the 20-day moving average, which has been quite restrictive near the 4,080 number, which coincides with the 38.2% Fibonacci retracement level of the long uptrend that started in 2022 and peaked at an all-time high of 5,597. Well, from a technical perspective, we can see that the bias is still skewed to the downside. According to the technical indicators down here, there's still weakness reflected in these technical indicators. So practically that means that a bearish breakout is more likely than an upside one. And however, looking at the events ahead, well, besides the geopolitical conflicts, which could still support the US dollar, the tariff story could also come back into play as the Section 122 extension of Trump's administration's global tariffs is about to expire this Friday after 150 days. So we may get some more headlines about tariffs. We already got some new tariffs against Brazil last week. President Trump also accused China about intervention in the 2020 elections. So I wouldn't rule out more tariff headlines, which could bring some uncertainty about the global trade at a time when the energy sector is already restricted by the supply constraints in the Middle East. So perhaps the tariff story could bring more uncertainty about inflation, and perhaps in this case, a broader conflict could support the precious metal. Nevertheless, we would be watching also the geopolitical factors which have been supporting the dollar as well. So in the meantime, it looks like the risk is still skewed to the downside. However, I would wait for confirmation below the 3,950 level. If that floor fails to hold, we could see a decline towards the 3,800, and then lower than that, the 3,700 territory could also attract attention. This is also a trend line zone, including a trend line which is a longer one taken from 2023. So that area could also act as a floor against downside movements before we head towards the 50% Fibonacci of 3,600. Now on the upside, if the 4,080 level gives way, then perhaps the price may attempt to retest the 200 and 100-day moving averages somewhere near 4,340. That's where the price peaked in June. Then beyond that, the 4,500 and the upper band of this broader bearish channel could come next into view. And now looking at euro-dollar, well, this FX pair might be influenced by the ECB policy meeting later this week on Thursday. Expectations are for steady interest rates, but it would be quite interesting to see what policymakers believe about inflation pressures. Of course, June's readings, CPI readings, showed a notable decline. But given the continuous conflicts in the Middle East and particularly in the Strait of Hormuz, news, policymakers could shrug off this decline in inflation and instead remain cautious about any second round inflation effects in the coming months, which could consequently hold hawkish bias in place, and that could potentially support euro dollar. But we also have flash business PMI readings coming out this Friday out of the Eurozone. Expectations are for slight improvements, so that could be also supportive in case the ECB event proves uneventful. Now, from a technical perspective, while the price has been struggling to rise beyond the 1.14 area, it's still constrained around its 20-day moving average, but it keeps a floor near 1.1420, and that retains a ray of hope that perhaps a recovery might be underway, especially following the slump to a 1-year low 1.1323. Since then, the price has been moving higher, at a softer pace, of course. But it would be interesting to see whether this recovery could continue as above the 1.1455 level, which the price failed to cross last week. Beyond that, the 1.1415 and 1.5030 region, where the 50-day moving average is located, could be the next barrier before we reach the all-important resistance trend line drawn from January 2026 near 1.1580. Successful penetration higher would actually improve the short-term outlook, suggesting that this downtrend is probably not as serious as it was previously seen. Now, if we look at the technical indicators, well, we can say that the bias is not yet in the bullish area. The RSI is still below 50. The stochastic oscillators is looking to be turning lower again. So we need a confirmation beyond this short-term resistance trend line, the 1.1455 level, to become more confident about the increase from 1.1323. Otherwise, failure to hold above 1.1420 could take us down to the 38.2% Fibonacci level of 1.1355, and then perhaps this tentative support line from March could also act as support somewhere between 1.1275 and 1.13. If not, if the sell-off continues, then all the attention will turn to the 1.12 region and then down to the 50% Fibonacci of 1.1125. And finally, looking at the US100 index, which will face more earnings releases later this week. Google's parent Alphabet and Tesla will be reporting on Thursday, on Wednesday, and then on Thursday, Intel will also report its own earnings. Of course, looking at the market action, we can see that there is some deterioration in the short-term outlook. The price has broken below this symmetrical triangle and faced a 5% decline to 28,200. While that decline happened below the simple moving averages, clouding the short-term outlook. And even if we look at the technical indicators down here, we can clearly say that the bias is skewed to the downside. So more declines could take place, especially if the earnings releases disappoint. Obviously, traders will be looking about profitability in AI products and profit margins, as well as capital spending and AI monetization, about whether companies are actually gaining any returns from their investments. And of course, forward outlook about the next quarter could be important, and any disappointment, especially after Google delayed its next Gemini release. Its next Gemini version, well, that actually was contributed to this decline, and therefore any negative forward guidance could extend this decline perhaps towards the 100-day moving average near the 38.2% Fibonacci of this outlook at 27,700. Of course, that requires a break below the previous low of 28,200, which managed to support the market on Friday. However, any significant declines below 27,700 could take us down to the 50% Fibonacci of 26,770. Now, what could boost the market? Well, perhaps I would like to see a clear close beyond the simple moving averages and above the lower bound of these triangles in near 29,870. More importantly, a break above this resistance trend line near 30,450 could bring upside risks into play and could direct the price towards the 31,000 psychological mark, while a steeper increase could reach the 261.8% Fibonacci extension of this latest downfall near 31,820. So it looks like markets are still facing some downside risks in both gold, euro dollar, and the US100. But let's see how the fundamental developments will play out for these markets. In the meantime, you can always visit our XM page for more analysis, and of course follow us for more technical updates in this channel at xm.com. So thank you for watching and see you next time. Bye bye for now.